Hello and welcome to this hands-on training lesson number 2. If you look at here at the top, how to make money, we focus on hands-on training. As little as possible, we focus on putting you a lot of information, a lot of charts, a lot of graphs, a lot of presentation. There's courses out there with 5 hours, 10 hours of presentation. We want to give you a short presentation right to the point and get you on the charts on your demo account, then on your live account so you can practice. In today's lesson, we're going to talk about types of charts, time frames, and market direction. Before I get there, that was something that was mentioned on the first video, which was lesson number 1, MetaTrader4 Platform. MetaTrader4 Platform is the most powerful and most used platform in the world by Forex, and now getting very popular among the crypto traders. When using the MetaTrader4 platform, they use a PIP, a price interest point. MetaTrader4 or Forex pairs, they do not make money or lose money as a standard stock. I wanted to make it clear here. I'm going to put a link on this video and on the first video about what does that mean for an investor. All we care about is how much are we risking, how much are we losing. When using the MetaTrader4 platform, the definition that you need to know in order to calculate your risk and reward is a standard lot, which is one lot. There's a mini lot, which is 0.1. There's a micro lot, which is 0.01, and a nano lot, which is 0.01. Nobody really uses a nano lot, but you can use it. Why do I start with the MetaTrader platforms? Because anybody can start with $100 or even $500. You can start very little, and then you can practice and start getting confident before you put in $10,000 or $100,000 in your account. You want to be confident that you're doing the right thing. All right, so what does that mean to us? That means that if you look at the standard lot right over here on the first line, standard lot represents $10 for every pip that it moves. A mini lot is $1, a micro lot is about 10 cents. Okay, that's great. Now, what are we talking about here? Here's what we're talking about. Here is an example of the US, or the euro versus the USD, the euro dollar chart, and or euro US dollar pair, Forex pair. You want to calculate your risk, you want to calculate your reward. What are we talking about? Let's say you are entering right where my mouse is, where the price is right now, 1.2118, but you want to put your stop below the low here. This is the low point. You're talking about 180 points, so let's make it even. 200 points or 200 pips. What does that mean? Well, let's look at the chart and define what a 200 point move means in terms of risk reward. So if you're risking one standard lot, that's 200 times 10. So if the trade goes against you, you are losing $2,000. Now if you go with a mini lot, that's 200 times 1, that's you're risking $200. And then you go with a micro lot, which is 200 times 10, then you're risking only $20. Or even a nano lot, then you're risking $2. So this is why the MetaTrader platform and pairs, Forex pairs, is a great way to start. Okay, now let me show you what I'm talking about over here. So if we bring another chart over here, for example, here is the mini terminal. I'm looking at the MetaTrader4 platform. This is the desktop application. On the first video, I talk about the mobile app, which is great for on the go. You can trade and make money and don't have to really be in front of your computer. Now, if you have time, this is an advanced version of the platform. You can do a lot of technical analysis. But going back to the lots and how much you're making, how much you're losing. Here, if you look at the mini terminal, you're looking at about the lot size. If you're making a purchase right now, if you're putting a buy order, the market is currently closed, I cannot put an order. But if I'm making a purchase, I'm looking at one 0.01. If we look at the chart again, here's the calculation. It's 1 micro lot that I'm risking. So if the trade goes against me, I'm only risking about 200 200 pips if I'm looking at this specific chart. All right, so that's why you want to make sure a standard lot, you have a specific amount of money on your trading account, a mini lot or a micro lot. You can start very small, but every recommendation is to start a demo account where you don't need to worry about this. All right, enough with this. Let's go into the actual training session today. Types of charts, time frames, and market direction. We also have a homework for you today. Like I said, we are hands-on. All right, types of charts. You're looking over here, representation of the IBM. This is a stock, the IBM company. The first chart you're looking at, it's a line chart. The second one is a bar chart. And the third one is a candlestick chart. The most used today is the candlestick chart. Why? Because the actual candle have a representation on the chart. If we take a look at, for example, Ethereum or the US market, this is a candlestick chart. If you want to change it, you just go up here. There's a bar chart. This is what it looks like. This is a candlestick chart. And this is a line chart. The line chart is great to see a market direction. Is it going up? Is it going sideways? Or is it going down? The candlestick is the most used because the actual candles they have a meaning. For example, let me give you a perfect example here. This candle right here, this green candle, is a bullish engulfing candle. And what that means is that depending on where the candle is placed on the chart, it means a reversal. If the market is going down, which was going down over here, it's very likely you will go up to the upside. So there's high probabilities. Okay, this is a candlestick chart, and this is what I would recommend you to stick to it. All right, chart time frames. Now, when you look at a candlestick, you need to know what is a bullish candle, what is a bearish candle, what is the candle that is actually going up, what's a candle that's going down. Well, the color kind of tells you. A green candle, you think about money, you think about making money. The red candle thinks about red, or you are in the red, you're actually losing money. And if you look here, the definitions, there's the wicks. These little things here called the wicks above the candle, wicks below the candle. This is the highest and lowest point where price was traded during that time frame. A green candle, it opens down below, it closes up and forms a green bullish candle. And on the bearish candle, you have the price opening high, going down below, and then closing at the bottom right here. See my mouse? It's closing down below, okay? And this is what different time frame candlesticks look like. We're looking here at the IBM chart of 3 bars. This represents 3 days of trading. A lot of trading goes on throughout the day. We have a little red candle in the beginning. That means the price started at one point and finishes low. In this case, it kind of finishes, it started at 193 and it finishes somewhere around 192. So it was down. On the green candle, the candle actually represents that it starts below and closes above. So you can think of it starts around 191 and it finished about 192 or so. So the price actually went up. That's what you want to look at. Now, if you want to look at a smaller time frame, you're talking about a 4-hour chart, also very well defined. The one candle that you see on the daily chart represents 2 candles like this on a 200-minute time frame. 200-minute candlestick chart. And then these other candles here represents 2 more candles that was specify on the daily chart. Now if you look at the 60-minute candlestick chart, every candle represents 60 minutes of trading before it moves to the next candle. So what you see here is the candlesticks of 60 minutes, which was the 240-minute candlestick above. All right, if you want to look at in real time, this is a daily time frame for the US market, the S&P 500. This is every candle here represents 1 day of trading. Right now it's trading at, or the market has already closed, it's trading at 3,941. That's where it closed. Now if I look at the 4-hour time frame, this is what it would look like. There's way more candles, there's way more trading to do. Now keep in mind that smaller the candle, like you can see, like 1 minute here, there's so many candles. The smaller the time frame, the less likely your patterns will be reliable. The higher the time frame, for example 4 hours or 1 day time frame, the more reliable your signals or your patterns, your strategy will be. All right, enough with that part. Now we're talking about, let's look at one more representation here that is a very good example. You're looking at 1 minute chart. So every candle here, you have 2 candles which are green. You started below, you finish up. Now that represents, on the 2-minute chart, it represents 1 big candle. All right, now market direction, there's only 3: up, down, or sideways. It's very clear. The market is going up either very quietly on the right side here, or it's kind of going up, a little bit of retracement, a little up, a retracement, and down. It's going down, a little retracement, down, a little retracement, or it's just going down. Now sideways, very easy to see. Look at these examples. We're going to see this live, so hold on. It just goes sideways, kind of bouncing ball. It goes up and down, up and down. All right, so here's the homework we have for you today. We're looking at the S&P 500. This is the 4-hour chart. This is the daily chart. Okay, so you can pick the daily chart and you have to tell me, is it going up or is it going down or is it going sideways? Okay, so this is your homework. I'm actually going to give you a better homework that you're going to get hands-on. That's what I'm talking about here. Your homework: open your demo account, try on a free platform, identify the market direction, a daily price of Ethereum, which is a hot crypto going on right now. Cryptocurrency is hot for the last 3 months. Okay, you can also let's do here. You're going to see, I'm going to have it 2: Ethereum and Apple. What is going on? Apple, this is the chart of Apple. You're talking about currency, you're talking about forex, you're talking about stocks. It's all about a chart. And when do you enter so you can make money? This is the bottom line. Look at my other videos for lesson 3 and 4 for strategies, money management, and everything that you need to know in a short time so that you can get on the chart and start practicing. This is Apple, and you have to tell me, is it going up or is it going down or is it going sideways? Ethereum, this is the Ethereum chart. Is it going up or is it going down? This is in the last 3 months. All right, how about now? Is it going up, down, or sideways? And how would you do your strategy based on the different markets? Because the markets never go one direction. All right, fellows, thank you very much for watching. This is the second lesson, and stay tuned for the next videos, which on lesson number 2, lesson number 3, we're going to talk about the concepts going long and going short. You want to know how to buy, go long, so you make money when the stock go up, and you also want to sell short. How do you make money if there's a market crash, if there is a downturn? Okay, so lesson number 4, we're going to talk about the formula to consistent being successful, so you can be successful. And then we're talking about lesson 5, support and resistance and strategies. All right, thank you for watching and have a great day.